short term in anything to me is noise. And maybe that's an unfair characteristic, Jesse, but to me it is noise. I have always been of the mindset of looking at things from a macro perspective. And I think when you focus on the rustling leaves of the trees and ignore the forest, you make a mistake. And I think that that's really the big picture here. I think we can draw an analogy between a country like China versus one like the United States. We think in terms of minutes and hours and days and weeks, and they think in terms of years and decades and centuries. And, I think from a macro perspective, the case for gold has never been stronger on every single level. You know, when I look at several criteria that makes me say that, you have the Bank of International Settlements reclassifying it as a tier one asset, the only other one next to US dollars and treasuries as far as central banks are concerned. You have a massive drive to repatriate gold by the central banks from the centers of deposit, namely the United States Fed, the New York Fed, or the Bank of England, where metals have been held for quite some time. When you talk about the central banks, who over the last 15, 18 months have bought more gold than at any time in their history, I look at them not only as the most well-funded banks, of course, or entities, rather. Of course, that's relevant and important. But I also look at them as the most well-informed, and that's more important. They know the playbook. The central banks know where to go on the wet field in front of us, and they know the playbook. And I think when you see the most well-informed, on top of well-funded, sophisticated investors on the planet buying more gold than in any time in history, it betrays the price, it betrays the rhetoric. But flipping that around, that's exactly what they're using, the price that is so counterintuitive, the rhetoric that is so anti-gold by the establishment, to run cover for their acquisition, their methodical acquisition. I mean, people should think, in the environment that we find ourselves in, 40-year high inflation recently, geopolitical and political upheaval, the BRICS, all of these things, we would expect gold to be much higher, and it will be, but it is the suppression of the paper market that the West is clinging to make their system and the bond market and the system seem stronger than it really is. And the East and their foes are sitting there saying, great, suppress the price. We'll stand for delivery. We don't care. And that is when things will change, as we get to the point where I would say you can only suppress a market or manipulate a market for an extended period of time by pushing it in the direction that it is going. And when you realize that for the first time in my 33-year career, the last few years, we have seen a global drive towards accumulation of precious metals, of de-dollarization. When you see countries like Japan and China and Saudi Arabia dump bonds to where Saudi Arabia is holding the lowest number of bonds, U.S. treasuries, that they've held in over 6 years, and China and Japan on a methodical dumping spree of our treasuries, not rolling them over, cashing them out. At what point are we in this cycle where the U.S. assets and the U.S. investments are losing their luster? So yes, I think that from a 30,000 foot perspective, Jesse, I'm incredibly bullish on gold and silver. I believe in the term logarithmic decay. In fact, it comes into focus on so many things that I talk about. I'm sure in our discussion today, I'll bring it up again. But logarithmic decay, you could think of as the Niagara Falls, where you might be 20 miles upstream and have no idea that there are falls in front of you. And you're on a raft, and little by little, the pitch starts to decrease. Little by little, by little by little, little by little, by little by little, by little, and bang, all at once. Now, where are we on this curve of logarithmic decay? And the same thing could be said for, if you invert it and talk about where are we in terms of gold accumulation or dollar divestment. The bottom line is that when you're on the river upstream miles before the falls, you may not see things as clearly as you would expect to. And I think that's where we are right now in the gold market, that most people don't see things as clearly as perhaps the central banks and the commercial banks do, who are accumulating copious amounts on every bit of weakness they see. So I think we're just beginning on what will be um, a much, much, much higher price in both gold and silver before the music stops. I know for a lot of people, the results of the BRICS meeting were disappointing. And, I had a couple of drinks with Jim Rickards a month or two ago before the meeting and talked to him about a lot of these things. James is one of the smartest guys in the world. And for those who don't know who he is, I'm sure most do, best-selling author, was hired as a consultant to the CIA. I think in terms of macro perspective, big picture probabilities. And the probability of there being a gold-backed currency has never been stronger. It will happen, in my opinion. It didn't happen August 22nd, like he said. And I think there was some disappointment. He said something else that I took even more, and I said this in my presentation at the Rules Symposium, that I took more away from than the fact that he was calling for a gold-backed currency to be issued August 22nd. But as far as that's concerned, first and foremost, the Russian finance minister has told us for 2 years this is going to happen. And I believe it is. In fact, at the end of the meeting, the finance ministers of these countries were told to go back to the drawing board and come back and present their findings next year at the summit on a common settlement currency. It is presumed to be pegged by commodities and or gold, and distributed ledger technology backing it. And one of the things that I noticed along the way, although I never put them in saying they're going to combine, I just inferred it, is the combination of the Shanghai Cooperation Organization and the Eurasian Economic Union. Now, I have talked about 4 entities in all my videos because of the systemic connection between them all. They're all intertwined, and that would be the BRICS, the Belt Road Initiative, the Shanghai Cooperation Organization, and the Eurasian Economic Union. And when you talk about, for example, the Belt Road Initiative, it's the largest infrastructure project in human history. We've talked about this before. Over 150 countries, over 75% of human population, roughly 50% of global GDP. It's the largest infrastructure project ever happened. And the most glaring thing to me on the Belt Road is that every one of the OPEC countries, including those in South America, are on the Belt Road Initiative.